What's the program today? You're on mute there, Andy.
Thank you, Scott, and thank you for that introduction. And my pal Jamie, how are you, buddy?
Doing well, Andy. Doing well. How's it going over there?
Oh man, yeah, it's going. It's kind of feels like a Friday, but we actually have a pretty decent crowd in here um, for what is a holiday tomorrow. So yeah, that's encouraging. So let's dive into it. And Bruce, yeah, it's his first day as a subscriber. Welcome aboard, Bruce. And we hope to be seeing you around a lot more. We do have regulars that come in here, and I see them in here at every webinar, and I tell you what, those are the guys that are and gals that are most likely to succeed. So let's just dive in, and before we do, let's go over the legal disclaimer here. Anything that will is for educational purposes. Nothing that should be taken as investment advice. That's not what we're here to do, but we are going to look over some cool software, look over some, actually another multi-strategy window that I've kind of built for you today, and talk about Holly. Not a bad day for Holly, huh, Jamie? I mean, I'm sorry, I probably put him on.
No, not at all. I'm fumbling with my mute button as well.
Oh, I'm sorry, I know. I asked him to go.
It feels like a Friday, so remember, everybody, don't wake up itching to trade tomorrow because the markets are closed for Good Friday. But you know, Andy, I mean, it's almost like you couldn't have written a better script for today with the market action, and you know what I'm getting at here. But hey, nice green day for everybody, lots of long opportunities, and of course, Holly performed quite well.
Yes, yes. So real quickly, guys, nothing you hear see should be construed as investment advice. If that's what you're seeking, look for a registered broker or RIA, somebody in that capacity. Now let's go talk about our support, education, and training here. You regulars are and can be daunting at times, but once you get to the feel for it, you're going to find out it's very intuitive, and we're going to make sure you get the feel for it because we provide education, training, and support throughout the whole week. We have 4 webinars a day. I mean, 4 a day, that would be a lot. 4 a week, Monday through Thursday, all in the 5 p.m. Eastern time. It's usually a combination of myself, Jamie, or Steve. Starting to get some of the other guys to pitch in. Jamie's going on vacation next week, and Sean is going to be doing his Monday webinar. So you guys be sure to make that. He's going to go into some cool option stuff. All right, he's good at trading options, so that's one you don't want to miss. On Wednesdays, we have a Q&A/demo with our CEO, Dan Merkin, and our CTO, Brad Williams. That's always a fun one to come in and find the stuff that's coming down the pike soon, and also a great place to come and ask questions. Then let's not forget our traders room. I know most of you in here are already in there, but for those that do not know about it, we have a daily trading room that is free to everyone, even if you're not a subscriber, and you can come in there and watch Barry Einerson basically navigate the market using our software. He calls out his trades. There's some great traders in there also calling out their trades. It's just an incredible forum, especially if you're new to the game. You're basically watching over the shoulder of a professional trader. Friday support session, guys, we will not be having this tomorrow because of the holiday, okay? But after tomorrow, be sure to return next week, 11 a.m. Eastern time, for our Friday support session. Great place to come if you did not get any of your questions answered during the week through our TI University, which I'm going to talk about here in a minute. Or in our webinars, we have this Friday support session where you can come in and ask anything you want. Brokerage Plus. Guys, if you are kind of more advanced and you're really good at writing strategies and you don't want to take the time to manually trade your strategies and you want to automate it with interactive brokers, you can do that with our Brokerage Plus module. And I'm going to leave it there just to let you know that it is for the advanced, traders. And if you want more information, just go to trade-ideas.com/beta. And this is what I was referring to, TI University. This is something we started about a month ago, and it is going strong, and people are really getting educated in there. Used to be that you got a free one-on-one training session when you signed up with Trade Ideas. Now, when you sign up, you get to enroll in TI University, which is basically, let's see, well, it's a 6-hour curriculum. It's a 6 hours of class starting on a Monday. Jamie, and help me on the time here. Is it 12 Eastern? Yeah.
We start at 9 a.m. Pacific,
right.
10:30, so that's 12 to 1:30 Eastern. Yeah.
Right. 12 Eastern. They start at Monday, and we have them on Monday, Tuesday, Wednesday, and Thursday. And it goes from 101 to class 201 to class 301 to 401. So you can see you get more and more advanced each day. But 6 hours worth of training, guys, on top of these afternoon webinars, on top of Barry's trading room. So really, we provide plenty of support and training, guys, for you to really nail down this product. So with that said, let's move on and talk about the agenda today. All right, we're going to talk about the market recap. I think you guys probably witnessed what's called a little window dressing today. I'll go into that concept. The Holly recap. Jamie's going to take the wheel and talk about Holly, a very successful day for Holly. And he will highlight about 3 trades. I listed about 3 of them there. I'm not sure those are the ones he'll go over, but he will definitely go over, and he's real good at breaking them down for you. So, and then I'm going to come in. Last week, guys, I shared a bullish candlestick pattern. It's kind of a daily candlestick pattern. Well, I've been working on a bearish daily candlestick pattern too, and I will share that with you today. We'll go over that one, take a look at some of the strategies. It is a multi-strategy, and then we'll go over that. And then if we have a little time, we'll do a few chart requests. And even though we do have a good crowd in here, it's not what I'm accustomed to, and that makes sense. So we may, we may cut it off a little bit early today, so everybody go out and start and enjoy the 3-day weekend coming up. All right, so let's put back out of this right quick. Wasn't supposed to do that. And let's pull up the SPY chart. So guys, what we've been seeing here is pretty much over the last couple of weeks, there hasn't been too many bullish things to say, about this, pattern that's happening here, except for the fact we have been holding in the 200-day moving average. But as Steve mentioned the other day in the Tuesday webinar, and you guys hear me say it all the time, some of your best bullish runs come in bearish tapes. Okay, and there's logic behind, there's reasoning behind that. So when you get this bullish action, sometimes you get some incredible bounces like we saw on this day 3 days ago. What happens in that case a lot of times, and it just, like I said, it makes sense because you have a big sell-off. Well, what you have is a lot of people getting short the market. People don't like to short the market when, jump in front of the train when it's heading straight up, and that's wise. But once it starts to show a little weakness, then the bears start salivating and they start putting on short positions. Well, what happens a lot of times, and why you will get these incredible bull runs in bear markets, is when a market may get down to a critical level, bears are trying to hang on. Short, people who like to play the long side are salivating, thinking, oh boy, we got the 200-day moving average here, I'm looking to buy. And then we have the next day open, you have a gap up. Not only do you have fresh longs coming back into the game, because they're accustomed over the last 8 years of catching these bounces for really nice gains. All right, so it's kind of like Pavlov's dog. You got a dip, you buy it. You got a dip, you buy it. Well, so in a case like this, when you have new buying interest flooding into the market, now you got all these people who are short too, and they're short covering. So you get kind of some really good some really good moves, you know, in a bearish tape. Now, I'm not calling this a bearish market, but I think we'll all agree that it's been somewhat of a bearish tape lately. Now, so where are we going from here, and what happened today? What happened today does not hold a lot of weight with me, because I'm accustomed throughout the years of trading, and I know the last day of the quarter, trading day of the quarter, you get what they call window dressing. And what is window dressing? It's to summarize it, it's basically big fund managers holding the market up because they know the quarter end statements are going to be going out after the close of the day today. So they want to prop the market up so they'll look good, and maybe they'll get their bonus. I don't know, but it's very common, and that's why I'm always careful about shorting, you know, the last few days of the market, couple of days, because you do get, and they refer to as window dressing. Why commonly held stocks like Facebook today had a nice bounce. Why commonly held stocks like Amazon they had after tried to sell off, you know, bounced back nicely. Apple. So you'll see them in a lot of, Apple didn't know. I didn't finish all that well. As a matter of fact, I finished close to lows. That was pretty ugly. Let's see what happened here. Oh, it's all on the close too. Oh, interesting. I have to keep an eye on that.
Yeah,
I didn't know that. Yeah, that was kind of an ugly close there for Apple. So where are we going, guys? I don't know, but I am going to point out one thing to you, because I mentioned on our way up how we were kind of, what happens is you get market sold off hard, bounced off the 200-day moving average, and then you had this nice move higher, and then we started forming a wedge. This is not the perfect one. I'd really like to have a day right around in here somewhere where we'd have another data point, but nonetheless, it's kind of a sloppy one, but still you can kind of see the wedge pattern. Now, when you have these wedges, most of the time, they end up going in the direction of whence they came. So we had a drop off here, and then we had a nice bounce back. We wedged, and we popped up higher out of it. Now, this can be seen as just the opposite. We have come down pretty hard now in the spiders, and now we've once again hit the 200-day. This is not wedging up here higher. This is wedging now in the lower portion. So I say most of the time, I don't know the percentages, but anytime a stock moves in a certain direction for a certain period of time and then forms a pattern, it has a tendency to come out of that pattern in the same direction that it was in. So this is what I want to kind of imprint on you, because if we do end up wedging here like we are right now in these spiders after coming down, be careful if we break this wedge to the downside, because we are going to be breaking out of this wedge in the same direction from whence we came. And we're not only not going to have that, we're going to be potentially breaking that 200-day moving average. So next week could be interesting. It really could. So keep an eye on it. I'm not by any means suggesting, you know, everybody get short, we're going down. I'm just saying I don't like to do that. I don't like to guess which way we're going. Okay, that's not what our job is. Our job is to react. But keep that in mind if we do, you know, if you're long a bunch of stuff in your swing or long-term account, yeah, because if we do come down out of this wedge and break this 200-day moving average, we could see, you know, it'll definitely test this low back over here, and then you're breaking really resistance. And it's like I was explaining to an advisor yesterday that, you know, this price action. You know what, guys? I'm gonna take time. This is important, okay? Because I'm gonna take time and show you something real quick. I want you to imprint this chart right here, the spiders, and then I'm gonna go over here and I'm gonna pull up. This is something else I showed the fund manager, this advisor yesterday. I'm gonna pull up the. I'm gonna pull up Bitcoin.
I was just thinking. I was like, I wonder if he's gonna pull up Bitcoin, because it is. Hey, you're seeing yep. That one play out before this one, and guess what? The charts don't lie.
No, This is what, now Bitcoin has had a huge run. Spiders have had nothing like the Bitcoin has run, and it was overbought. And it's kind of coming back to reality, and it's probably going to level off somewhere. But I want you to notice this pattern in Bitcoin. You've had a nice run up. This is the side of the mountain that you're hiking up, that you're taking a hike up, and this is what I call the other side of the mountain where it gets really cratery and a lot of crags. But anyway, look at this right here, and I could pull up other charts over history, but this is kind of the pattern you will see a lot of times when you get what I call the other side of the mountain. And you start getting volatility come in. Things get a little more agitated, all right? And then you should try to come up and make another move higher. You can't do it and roll over and you move lower. But this, once again, is the other side of the mountain. Now, I want to compare this to what we're seeing now in the spiders. And look at this pattern. Very similar. I mean, you have had a nice, huge run up. That's too zoomed down. And now you had, like what you saw in Bitcoin, a fall off, tried to push higher, and now we're rolling back over. So is there any correlation there? I don't know there's actually any correlation, but there's definitely something to compare here, because let's face it, price action, when you look at it on a candlestick chart, is nothing but human behavior. You're seeing human behavior in a graph, basically. And once again, look at this. When it peaked out, came off hard, just like you saw in the spiders, tried to make a bounce and then rolled back over. We would be about right here is where we are now in the spiders, okay? And I will show you that. So I just kind of want you to look at human behavior in Bitcoin, and now what you're potentially seeing, very similar to that. We bounced up and we're looking very similar to that point I just showed you there in Bitcoin, which is about right here. No, right here. So be careful, because it does look, similar to what you might find in a market top. I'm not calling a bear market, but just be careful. So I hope that was educational there.
That's a really good comparison too. I mean,
well, thank you.
And look, the things to compare that to don't come along very often, if ever. So as they say, everything happens turbo speed in crypto world.
That's true. Yes.
Boy, it didn't take long for that chart to play out that we were looking at.
No, it didn't. But I mean, honestly, let's look where that thing, how fast it got, basically from 0 to 20,000. So, like I said, just coming back to reality. Now, am I looking for a 68% correction in this? No, I'm not. But could we have it 35 or 40? Sure, we could. It's not uncommon. It happens quite frequently. So we'll see what happens. But let's move on. And I think, Jamie, I'm going to pass the baton to you and let you talk about Sweet Holly today.
Sweet Holly, yes. All right, let me grab this and just let me know when you can see.
Yeah.
All right.
Got
Everybody got eyes on. Perfect. Let me rearrange one window. Keep an eye on the questions. All right. So Holly, obviously a nice green day to fit with the nice green fluffing that you saw in the markets today. And, it'll be an interesting Monday and Tuesday, needless to say, of next week. I'm almost kind of bummed out. I'm supposed to be on vacation and unplug and all that stuff, but it's hard to stay away when the market's doing this kind of stuff. Okay. So, of course, Holly was nice and green as well. What stands out today about Holly is risk off won the day, right? So we're looking at risk off total of 216 versus risk on of $1.48. Beautiful yield curves nonetheless for both. So what does that mean? Well, when we take a peek at all the trades, we're not going to see a whole lot of spread between risk off and risk on today, because while the market did recoup a little bit, we did have a little peel off at the close. That's going to degrade some of the risk on as well. And things just weren't holding up like they were if this was a big trend day, right? So therefore, not a bunch of spread between risk off and risk on. Now, I'll be happy to cover those symbols that Andy had listed on the agenda earlier, which are LNG, baby, and CMP. Of course, you'll notice there they are, LNG, baby, and CMP, because I'm sorting by risk off. So we're looking at, you know, best winners all the way down to the losers on risk off. And from a trader's perspective, you know, I mean, hey, this right here, all these trades, not a bad blotter. I'd take that any day, right? I'd take significantly less than that every day. And you're looking at $2.16 on, what was that, 15 total trades today. So, you know, of course, assuming you have a decent commission schedule, that's some pretty nice cash on a daily basis. But once again, risk off. So if we take a peek at LNG today, and here we are looking at 15-minute candles. Of course, here's the open. So, you know, Holly, let's just take a peek here and resort by time. So she got active about 39 minutes into the open today. First trade, 10:08 Eastern time. Of course, this guy went off about 2.5 hours into the open. So we can see right here, really nice entry from Holly. Of course, in case there are people out there who've never seen what I'm doing here, when I double click on Holly's plotter, we get all the information pasted up on the right column here, which is current price of the stock, green, blue is entry line for Holly, and of course red is stop loss. Now, beautiful entry. Now, of course, it's all about man with machine. We get the signal, we pull it up, and you know, of course, this part of the chart has not happened. We're seeing it right here. So all we have is a look back of here. Of course, what's Holly's strong suit? The statistical probability. Tailwind, of course, generated the trade. Tailwind came to the party just 0.1% short of 65%. Anything coming out of that, according to the back test and Holly's analysis, has almost a 65% chance of working. Well, today, look what it did. The thing kicked out 5 trades and ran at 80% today. Overperformed by about 15%. So we know that it's got strong probability. You know, what was the market doing at this time? Right here at 9 o'clock. You know, market was just kind of hanging out. Let's see if I'm on the right. Yeah, market had been up, just hanging out. So, you know, what I'm trying to do here is put things in perspective for the way a lot of humans interact with Holly. So we get this beautiful signal. Why is it beautiful? Well, number one, it's from Holly. It's got statistical probability behind it. And number two, when we're looking at it in the moment, and by the way, anywhere in that 15-minute candle, beautiful price for this trade. So there was no chasing going on. Now, I also like this little pattern that's evolved up until Holly's signal. Nice and calm. We had seen the bottoms been put in. Buyers and sellers become equal. We get the signal. This is nice action too. Of course, Holly's stop down here. Now, of course, when we see things doing this, a lot of the times we can get away with taking this past, you know, 15, 30 hour time and setting a stop there. Holly's a little bit more generous on this one, which is fine. And then I also notice from my perspective, well, hell, got statistical probability, low risk. If it's been doing this and it's off the bottom, pretty good chance we're not going to get stopped out. And then if I just come over here and draw that line straight across from the high, I also know that if Holly's right with their statistical probability and we do make it back up to this line, then hey, that's a good sign, just period, or a great opportunity to add to this position, because now you're getting the range break. We're in it, we get a little sideways profitable action right here, and then we crack that line. Great time to double up on that position. And of course, eventually, boom, the market made a lot of things do this today, and of course, this is one of them. Now, hell, could have worked even if the market wasn't doing what it was doing today. We see it all the time. But just a few insights, you know, because like it or not, charts are the universal language. It's impossible to get away from them. And of course, we're humans. We're not a machine. So the way it works right now is we rely on Holly for the statistical probability and the number crunching. And of course, the more we use her, the more used to it we get. And then also noticing secondary and third things that you like about the intraday pattern, you're going to get more and more proficient at using this technology, right? So, you know, LNG, beautiful trade there. Of course, only 8-cent spread between risk off and risk on. Baby. Not a bad trade here either. You know,
No pain trade.
yeah, you know, a lot of these little bullish flag type looking things, we go up, we go sideways for a little bit, and as Andy was reiterating earlier, the same thing is true, it ends up going the way from whence it came. Goes up, takes a little breather, and continues on here. And once again, during the signal, we've seen there's been demand for the stock. It's taking its little breather. Added bonus, the green line that you see here. You know, and this is one of Steve Gomez's favorite, and it's becoming one of my favorites as well. The 10-period moving average, and typically, as Steve likes to say, when the stock is in motion, you know, it's going to stay above these lines. We did have some little excursions here, but it hugged that line pretty good. Guess what? Look what it did when it came back through it. After it made the big run and came back through it, guess what? It gave back a little bit. So once again, you know, all three of these trades were kicked out by tailwind, so we were rocking some pretty healthy statistical probability from all these guys. We get nice action before the signal comes. We've got a nice, clearly identified stop loss here. And, you know, whether we played the same game here, of course, this one's not quite as pretty, but the pattern is the pattern. Also had another opportunity to add a little bit to the trade if you liked what was going on here. Of course, this one, you know, even if you didn't get out on this candle, you still had plenty of time to make a decision. Am I going to get out? Am I going to stay in? What's Holly doing? You know, and of course, we can see Holly held that one for the duration, which this strategy geared up for a 2-hour hold time. So we can see that's when she gets out right there with the sell arrow, and the dark shaded green area is the risk off time period as well. So when we see the lighter shading, that would be considered risk on. And then of course, would have done worse trying to hold that thing, you know, after she gets out flat for a little bit. But I mean, what a perfect exit as well. You know, missed the top of the candle by a little bit, but hey, not too shabby. And let's take a look at one more here. CMP, a lot of the same characteristics that we see in the other trades that Tailwind spit out today. Got all of our metrics identified over here. Holly calling the entry here, same stats apply because it's the same strategy. Okay, well, once again, nice action. And I'm pretty sure if we went through tons and tons of charts, we're going to see this type of action on just about everything. Now, when we start seeing things like this on this day, and this is the third time we're seeing this, it should tell us something as well. Well, yeah, we're bouncing off the bottom, but man, things are sure going up with very little friction today, right? So once we see about 3 or 4 of these things, well, what are we going to do when we see some other ones, maybe from some other windows that aren't Holly, right? We start to identify this because Holly's already kicked out 3, probably more of these. So once again, another insight into, you know, observations that you can notice on some days, right? Obviously today, unlike many other days for a lot of different reasons, in the end of the quarter, a lot of those things that Andy was talking about. But once again, once we get the high probability signal here and this area of comfort, so we can call it, which is still well above Holly's stop loss, then we can play the same game. Mark the line. Now, this one did it. It just didn't go very far, right? Some are going to go a lot, some are going to go a little, some are going to do what you see here. And of course, this one was later in the day, so we really didn't have that much time to let it unfold. But same old song and dance. So, that's pretty much it from Holly today, other than just a stellar blotter. And I always like to point out max profit column as well, because today or any other day, if you're going to throw out 15 trades, and if we eliminate the 2 and 1 centers, because basically this trade went in the money for 1 penny at one point, a penny here, a 2 penny here, and then all these guys were 10 cents and more in the money. So this is not an easy task by any means. It's downright impossible for a human to do this every day, right? Because keep this in mind, which is more on the mathematical drill down level. But if you're at a broker dealer where you're on a per share level, so you can get away with, if you were slinging 100 share lots for 50 cents, so you're paying $1 in and out, all you got to make is a little over a penny a share on average to make a very good living. Now, that doesn't sound like a whole lot, but it is, right, on average. So just think about that. And you've got this system here today throwing out 15 trades, and it being in the money on the worst ones by 1 or 2 pennies, and then 10, 10, 11, 20, so forth and so on, right? So just a little something to keep in the back of your mind to try to level things out, because we're all in this from a business perspective. Maybe if we make a lot of money, then we could be philanthropists, but we're just hanging around for the entertainment value. Or I can't say no one, but most people. All right, so that's pretty much it for Holly.
Jamie, that's a very good point, and I didn't even notice that today, and I'm glad you brought it up. But look at that risk-off profit. And when's the last time you made 15 trades and your worst trade was negative 15 cents? And plus all those ones above, you had what? 5 trades, over 25 cents. And that's if you're an active day trader, that you can make some serious money off.
And even on the mediocre market days, this max profit column still holds up, right? So that's half the battle. Getting in the money is half the battle, and it's what takes a lot of people out, because the psychological beatings that you take when you're always out of the money, what kind of toll that takes. So it's all about, okay, high probabilities, when are you going to unwind them? It's almost like the art is getting out of the trade here, right? The art of the exit, right? And I'll leave it at that. That's good food for thought moving into the next week.
Absolutely.
All right, so let me kick this back over to you. And we're good.
All right, guys. Last week, I shared with you guys the bullish daily candlestick patterns, and I showed to you what this was. If we go into strategies and look up, let's take Doji, for example. Why is that not checked? How did that get unchecked? But if you go into configuration and you look under symbol list and you go, to daily, you will find all of our candlestick patterns that we have based upon daily charts. Okay, so what this is scanning for is the previous day of trading. Okay, it's not looking at the action today. Okay, it will be tonight, it'll be looking at today's action for the upcoming trading day, but it's showing you patterns that have, for example, topping tail, the ones I've used in the bull side or a green bar reversal. I believe it's bottoming tail around here. So there it is, bottoming tail and doji. But I want you guys to, look at this. There was some pretty good stuff that came through here. MT was kind of a gap and go, but there's your bottoming tail, which actually was close to a doji as well. But then you had a nice little gap and go here. RH was from the move it had yesterday from green bar reversal. Let me scroll down here and see what I can find. XNet, that didn't really do anything. Possibly putting in a bottom. I want to go back closer, and I think I'm going to have to, I must have stopped and went forward. JD, nice little, let's see, that looks like the hammer to me, but because it didn't close, I mean, I've noticed by using this, if you have any little wick at all at the top of these, it's going to put it, you know, more of a bottoming tail and not a hammer. So I'm not sure. I guess it really has to really engulf, you know, them. In other words, it has to be all body on the top to be officially a hammer with our software. WO, this is a beauty right here. Look at this bottom tail right here, and look at that move you had today, just right out of the chute. Boom, boom, huge move there in WOR. So anyway, guys, if it's also in, Steve has added it to our cloud link, so you can find it in there as well. Fernando, do you have a copy of our cloud links? I believe you do. I think it will be in there. And I will share this bearish one that I'm about to present to you today. But yeah, let me know if you don't have that PDF, and we'll get that to you because it's going to have all of them in there. All right. So, guys, I don't have time really to go through all of these today, but take a look at it. There's some interesting stuff pulling in this bullish candle, daily candlestick patterns. So what I did today is I went in and I put together a bearish one. This is a bearish daily candlestick patterns. And what strategies do I have in there? I have red bar reversal, just the opposite of the green bar reversal that I have in my bullish one. I have bearish engulfing, and I'm also using a doji. A doji can be any direction. So you can basically use the same pattern and just gauge which side it drops out of it. But I'm not getting a lot from these dojis on either side, so I'm not real keen on the doji so far. But the green bar reversal, the bottoming tail, and I will say this, guys, if you get into that, I think we need to do a little work on the topping tail. Wasn't working that good. I wasn't getting what I thought I should get. And there's another one, dark cloud cover. I tried that one and I wasn't getting what I thought I should get. So some of these formulas we may have to work a little bit on. So anyway, let's take a look at this. Let's see. Let's just go and look at the. Now I do have some sort of configuration in here. So let's look at the red bar reversal. Okay, so when I'm looking at a bullish one, in other words, I am looking for it to trigger right at the top when it's moving. It's a high alert, and I'm looking for it to trigger right at the high of the previous bar. Okay. Well, I'm not doing the same thing for the bearish ones, because what I want to see here, if I put hide unused, is I want to see, actually this one I am. I thought I changed that. You know what, I may not have saved it. Let me look at another one real quick, guys. Hold on just a minute. Bearish engulfing, configure. Okay, so what I've done, I've taken out the position in previous day's range. I don't think I did that to my other one, but I'm going to. And I'm looking for a change of close from the close. Change of close. A change from the close. Okay, so I want it to be just below, so I just put a negative 0.03% as my max. Okay, so in other words, if it hits a new low and it drops below yesterday's close out of one of these patterns, that's when I want to see it. I don't want to see it at the low, and the reason I don't is you get a lot of algorithm shakeouts that will take a stock just below yesterday's low. They sometimes do this to the high, but I see it more on the downside. They'll take it just below yesterday's low and they'll bounce it back up. So anyway, I want a little bit quicker glance at this one versus waiting for it to take out the prior day's low. But anyway, guys, keep in mind it was a very bullish tape today, so I'm not sure, you know, what worked in here and what didn't. But let's take a look at them. And plus, the prior day, remember how tight range that was, so we didn't get a lot of action in the market. So I'm thinking a lot of stuff probably just didn't have these patterns developed because it was a very narrow range day. But and you're going to see some, you know, some head fakes, you know, like this. Well, first of all, I don't think it's probably a good idea to be trading the first 5 minutes of the day. So I'm going to scroll up a little bit and see what has come through here. Final. Yeah, that one kind of worked. I mean, you see there, it went off at 1373 and then came all the way down here to 1354. That wasn't a bad one. Well, that one really didn't work. So remember, it was a very bullish tape today. So probably a lot of these didn't work. Let's take a look and see if it's bearish engulfing pattern on the daily. Okay, I can see what they're looking at here. This is your setup bar going back to yesterday, and excluding the wick, the body of this candle, okay, totally engulfed the body of the previous candle. So that's why you have a bearish engulfing pattern. Now, didn't work. Once again, very strong market today. There's another one. This was a red bar reversal. That was really, must have been a very narrow, let's see what the close. The open was 143.31. So yeah, and the close was, it was a penny. It was a red candle by a penny if you look there. So it doesn't take much. It just, like I said, 1 penny there and you have a red bar. So it's a red bar reversal. No, that really didn't work. And so I'm going to share with these guys, and I didn't expect a lot of things to work today because remember, this is a short, kind of a shorting strategy. So, you got to play what the market's given to you. And that was pretty sloppy, but, may work. Now, this one did work. This one was beautiful. That's an ugly one. And look where it is in relationship. I've noticed some of these ones that are near, all-time lows didn't work, or yearly range lows. But boy, this was a beautiful one right there. Calmain, and got a pretty good short flow to 20%. And that one was a nice winner. And that's the one you see just coming through over and over and over and over again at the end. So, guys, I'm going to share this with you. Now, I'm going to be honest with you. I'm not seeing, we may need to do a little work on these because I'm not seeing the setups like I'm seeing on the bullish candlestick pattern. So play with this at your own risk. But let me put it back on real time. I think I have it saved. Now let me just go ahead and save it. Actually, I got to change.
The stock is getting beat down today. The symbol is calm. Stay
I know.
Calm.
Good point. I was going to change this right here to, I got to take out that previous range. There we go. All right, let me put this on real time and I will share it with you. It is. And what I'm going to do, guys, is copy all and I'm going to drop it into your go-to interface. And your little toolbar there under the chat window, call it bearish candlesticks. So you will have a copy of it. That is not a great, thanks, Wally. Hey, listen, yeah, it's not a, well, it's definitely wasn't a bearish candlestick type of day. Let's face it. You take a look at the spiders, pretty much a little jig down this morning, but kind of up all day. But anyway, it's I'm not as proud as that like I am my Where's My Money. That one has been still performing very well, and so is Shorting Junk. That's a really good one. This is just kind of a multi-strategy that I wanted to share with you guys of showing you how you can go and get some of our candlestick patterns in the back. But once again, I've tested a few of those and they need some work done on them. Not so much the ones I shared with you, but some of those other ones. So be careful if you go into dark cloud cover or topping tail. Yeah, because I was seeing some bad data there. The candlesticks just wasn't reflecting what they should be. All right, guys, we have a few minutes left. I know some of you guys may have some stocks you want us to take a look at. And Christopher comes out right away with run. And I noticed this one today was coming through let me close this. The squeeze 52, kind of right there, broke out a 52-week high right there. And then, boy, just had a little bit of a bump and then kind of rolled over there in the close. It looks good. I'm always leery anytime I get a breakout that doesn't work. So, you know, what I would do in a situation like this is maybe just, you know, use your, well, first of all, I don't know if you're talking about, well, we're talking mostly about swing trading, obviously, in this one. So I'm going to give you a little trend here that I see on this one. That I would definitely keep an eye out if I'm long this stock. I would not want it to break this trend line. That's a very powerful trend line right there. So I would keep that. And not only that, it marries up good with the kind of a little horizontal line here that kind of where you bounced off a few lows, got close to it anyway. So that's a critical level right around 840 there and run that I'd keep an eye out. Now, obviously, it is on a multi-year high. Go back over here and you can kind of see it's kind of through all this congestion. So yeah, it looks pretty good if it can get back above today's highs. Looks like it might want to at least go to $10, which is about right here. You can see the little congestion going back there on the daily. Let me just bring this out a little bit so you guys can see more. There we go. And we're still having a little bit problem with our moving averages. Trust me, we're working on that. They get out of whack sometimes when you start. But here, yeah, is where it may possibly want to go. That's your next little level of resistance right there. So if it can get back above yesterday's highs, yeah, I would keep an eye above that, right above that $10 level. And for the downside, I would watch this trend. Anytime you have momentum stocks, once they do finally break the trend, it can be brutal. All right, let me see if I missed anything here. What was after run?
Hey Andy, just a little housekeeping. A couple of people, I'm sending out the link for custom formulas because that you know how that works. It's a read up and kind of start wading in and trying some out. But for the two people that needed that, I dropped a link in there. So that'll take you to the area of the website where you can log in and start creating custom formulas. There's also a PDF document in there, which is very detailed. It also has all the formulas in there. Of course, if you have questions after that, info@trade-ideas.com is the best place to send those questions. We also, Andy had a request for where's my money?
Okay.
So if you wouldn't mind dropping that in the
I will.
In the chat area.
I sure will. Now I do have a version 2, and I think that's also a version 3.
Okay, and Randy, I see your question about a custom 13 EMA and 50 EMA alert. Well, the thing about our scanner right now is we've given people the ability to put EMAs on the charts so far, but we don't have any EMA filters yet. Those are still in the workshop. So we're working on those. Don't know when they're going to be coming out yet, but just wanted to kind of get you in the loop on that.
And guys, if you, I don't think I have this version 3 in the PDF. So if you do use that, you might want to grab it. What I've done, I noticed the other day that I caught one, got short one right before earnings, and it had a huge, 30% gap up. I want to avoid that, so I put some earnings date filters in it. So where's my money is going in there right now, and it's version 3. So if you do have it, you still might want to grab it because I just changed this yesterday. All right, Mark asked about ABX. Now ABX, I thought, put up a really good fight. I love the way this thing closed today. All right, so if we look at the 15-minute chart, you're going to see here very nice, kind of close there on, it looked like it wanted to roll over, but kind of bucked the trend and closed close to highs today. Obviously, this is going to be kind of subject to what gold does. Let me put it back on the daily and let's take a look at gold. And gold, pulled back recently. Gold is something that, is always kind of being manipulated. The dollar has not had really that big of a move. It kind of bounced, looked like it was about to roll over lately, and it's bouncing back up. And the dollar, I have noticed that it's not so much of a defensive stock right now. In other words, when the market sells off, I'm not seeing a big push into gold. So it looks like to me it's probably more dollar driven. So definitely keep an eye on GLD, but for ABX, yeah, it's pretty much, right in the range, down on what probably about, I don't know, 20 cents or something like this, but holding up very well. You can see both days it tried to close below the 10-minute period moving average and bounce back up. I'm going to let Steve talk more about this on Tuesday, but because I know he's been making some comments about it in his Trade of the Week webinar. But for the most part, I would want it to hold, this 10 period. I think he agrees with me. I'm not sure exactly where the stop is, but for them, it's holding. It's just doing fine. I mean, yeah, a couple of days of pullback. We'll see what happens, but I'm fine with the price action so far. All right. Yeah. Do we have any more stock request? We probably got, and we're kind of getting close to the close here. Let me still going through it. All right, looks like we may have got them all, which is good timing. We got about 5 minutes left, and that's enough time for me to bring Scott in here. You guys hang on, because we just announced a big sale today that you don't want to miss out on. So, Scott, if you want to come in and walk us out and tell them what they offer we have for them this weekend.
Yeah, thank you. So thanks, everyone. First of all, let's make sure you've downloaded the new ebook that Andy and Jamie helped produce. It's 5 ways to win in a post-BTFD market. It looks like we might be in a post-BTFD market, so you should have these 5 strategies in your playbook. Just go to trade-ideas.com/ebook, plug in your email address, and get the book sent to you. Really easy. We have a podcast too. There's no new episode this weekend because of the holiday. However, there will be a new one next Friday, and you can listen to the last couple episodes anytime you want. Just subscribe by searching for Trade Ideas Podcast in whatever podcatcher, pod application you use, and find it and subscribe. There is a spring sale for Easter weekend. Use the code SPRING4AI. All the letters are capital. Saves 25% instantly off your first month or year of Trade Ideas, any of the subscriptions. You can also use it to upgrade and save the same amount. Just log in on the homepage in the upper right. Click on login in the upper right in your account management section. Then after you log in, you'll see a link for change your subscription. Just click on that, use the code on checkout, and you'll save 25%. The Holly March code's good till the end of the month, but that's this weekend. It only saves 15%, so I recommend you use Spring for AI. Any questions, email us, info@trade-ideas.com, and follow the guys on Twitter. Jamie is QuantBot. Steve Gomez, Today Trader, Dan Merkin, Trade Ideas 1. We also have Trade Ideas. And if you find us on Facebook, or Trade Ideas Pro on Facebook, like our page so that you see everything we post, and share it with all your friends, because that makes us happy. Have a great holiday weekend, everyone. We'll have the recording up later on tonight or tomorrow. Again, email us with any questions. Have a great holiday. Bye, guys.
Yeah, thanks, Scott. Thanks, everybody. Remember, no support session tomorrow. So, have a great Easter weekend, everybody, and we'll see you next week.
All right.
Bye-bye.